Hey guys, and welcome to the Working Money Channel. So we got Bitcoin here right now trading at $38,800. Over the last couple of days, we saw this price fall. We were trying to hold that $42,000 mark right up here, where we saw support and resistance formulate over the last little while here. However, now we are seeing Bitcoin break through that level, but on the macro time frame, guys, it's still looking fairly good. We have not broken 28.5, which I think down here, or here, let me just take this, bring it down here. I think this is the point of no return. We are still far above that, so $38,900. We have seen some erratic trading activity for Bitcoin since about the end of January, where we've just seen the price swing down, up, and now coming back down again. So indecisive trading at this moment in time. Again, low volume, so not an accumulation phase. I mean, this is what I'm seeing in the charts. We've essentially been trading sideways in this channel for over a year now. So this is an interesting phenomenon because we haven't really seen Bitcoin price do this over such a long period of time. TA Analyst here bringing up this long-term view if you guys want to kind of get an idea of why we are seeing this, why this is extending. So he says the 3.66 to the 2.66 to the 1.66 law, long-term target for Bitcoin is actually going to go over $100,000, guys, to 112K. Time dilates as total capitalization rises because obtaining the same percentages necessitates higher buying pressure. As a result, it takes more time to reach the peak. And so as he's demonstrating in this chart here, you guys can see the three bull runs and, the third one being the current one we're in right now. The halving markings for Bitcoin as well. So those halving markings don't move, but as you can see the trend, as we move up, the bull runs in the past were shorter and the bear markets extended longer. But as we're moving out of this, we are seeing longer bull runs, shorter bear markets, and so this is estimated to be the same. And as per those numbers, 1 over 3.66, 1 over 2.66, and now 1 over 1.66. So we are seeing this bull run get longer, the bear market get shorter, and he's actually calculated some percentages here just to demonstrate that. Also suggesting that, this bull run for Bitcoin is likely going to hit at around $112,000 per BTC. So again, we're in the accumulation phase. This bull run is just extending longer. This is why the entirety of 2021 essentially was basically just Bitcoin trading sideways. Of course, this has had an effect on altcoins like XRP, because we saw XRP at the beginning of 2021 collapse essentially because of the SEC lawsuit, then shoot right back up, found its equilibrium here in about March. It did not make lower lows. And then once Bitcoin did reach that first all-time high in the spring of 2021, altcoins shot up along with it. And this is when XRP essentially made that localized high of about $2 per coin. I think it was about $1.96. Since then, XRP, of course, like Bitcoin, has just been kind of meandering about, trading sideways by and large. So this is pretty much the story for all altcoins at this time. We are trading right now at about 74 cents per XRP. But I wanted to bring you this, guys, from the Wrath of Kahneman, the Global Blockchain Business Council 2021 annual report. So this came out at the end of last year, but I don't remember hearing about this. I wanted to bring this to your attention. The report talks about exchange tokenizing carbon credits on the XRPL with the United Nations. So the article is here. I will link this in the description, but I just wanted to bring up these key points. Building market infrastructure solutions for African Great Green Wall carbon credits. Exchange has been selected as a key partner of the United Nations to establish and sustainably operate a securities exchange out of Mauritius. We are working hand in hand with the UN Development System, or the UNDS, focusing on African market infrastructure solutions for carbon markets to contribute to the Sustainable Development Goals. Right over here, highlighted, Exchange will develop a carbon credit solution on the XRP ledger for the issuance of tokenized carbon credits in accordance with standards by the leading industry working groups like the Interworking Alliance, or the IWA, a Global Blockchain Business Council, or GBBC, initiative, and the Task Force on Scaling Voluntary Carbon Markets, of which Exchange.com is a member. So, creating, organizing, tokenizing those carbon credits on the XRPL. Looks like this is an initiative so far that's happening in Africa. However, I do not doubt that this could extend out. And, if the World Economic Forum has their way, more of those talking points that were listed in the Paris Accord for climate change responsibility, All these countries, well, some of them have signed on to do this. I do not know too much about the Paris Accord, to be honest. Nevertheless, well, in detail, I mean, I kind of get the overall concept of it. But climate change, one of the big ones, carbon credits, for countries or maybe even on the individualized level. One day that could certainly be a reality, especially for Western nations. So, albeit old, this is interesting news. Wanted to thank the Wrath of Kahneman for posting that. I also saw this, guys, from Michael at Val5 Links. The upgrade will, in the future, allow Algorand-based products to run in low-power environments. This is going to be big, too, especially if the powers that be see a world with low energy emission. So this is going to, let me just read it to you. Algorand upgrade set to allow for easy creation of complex dApps. The upgrade will, in the future, allow Algorand-based products to run in low-power environments like mobile phones and smartwatches, as well as on other blockchains. So the Algorand blockchain released a major technical upgrade designed to support cross-chain interoperability and allow developers to easily build complex decentralized applications, or dApps, based on its network. The upgrade introduces smart contract-to-contract calling, which allows applications to efficiently and trustlessly interact with other smart contract-based products. Calling refers to a smart contract function that returns the hash of the transaction that will be mined into the blockchain. Such functions can be executed by anyone, anytime, for any reason. And so Algorand just tweeted out a couple of tweets with regards to this. Algorand continues to deliver the technology required to power applications and solutions of the future, with the latest protocol release hitting mainnet today. And so there's the update with regards to that. Contract-to-contract calls enable development teams to build much more powerful and versatile dApps on the Algorand network by allowing one smart contract to call another. So, interesting development. Previously, smart contracts on Algorand could be called only by a developer manually storing data in each contract's local state, a tedious and difficult process. This upgrade, announced on Thursday, allows a contract to automatically call another one directly. So, the contracts are now expanding on the Algorand network, and I was more interested in these running on low power environments, like mobile phones, smartwatches, and I think that could actually extend to eventually maybe no or negative power environments if we do come up with contraptions in the future. I mean, you got to imagine in the future we could have devices that create and store energy, and then if there is no power available, they could utilize low energy solutions similar to batteries. I think these blockchains are moving in that direction, and we heard last year something similar with regard to the XRPL, being able to run XRP transactions without any connectivity, without any internet whatsoever. So interesting news here, more innovative development on the Algorand blockchain specifically. Wanted to thank Michael for posting that. Another one here from the Wrath of Kahneman, guys. Did you know the director of compliance for PTI, created with Ripple partner Forte? If you guys remember, Ripple is partnered with video gaming company Forte. This is Melissa Merrickman. Did you know she was formerly the BSA investigations manager at Ripple? Did you know that PTI is now licensed as a money transmitter and bit license in New York? So that's interesting news. Ripple investment Forte was created alongside Provenance Technologies, which just got a money transmitter license and a bit license from New York. They are one of 11, like Coinbase and PayPal, etc. So this is big news, connecting companies to crypto and fiat payment rails. Only one of 11. And so PTI, connected to Ripple through their mutual partner Forte, is now one of these 11 who can run a bit license, or rather does have a bit license in New York for transmitting payments through fiat and crypto rails. Wrath of Kahneman continuing, saying, now is the time amidst crypto crackdowns when regulated payment rails that involve XRP matter. And though quiet, Forte has been explicit about XRPL functions. So I've done some videos in the past, several videos over the years, talking about Forte. He does link some more information here, an older article with regards to Forte and how they are integrating XRPL features into their gaming platforms. So I will link this tweet thread in the description of the video if you guys are interested. But an interesting connection there. Melissa Merrickman, both connected to, looks like PTI, Director of Compliance for PTI. PTI is connected to Forte, and Forte Ripple enabled. Great news there. Wanted to thank the Wrath of Kahneman for posting that. And, the Wrath of Kahneman, always on fire. Another one here, he just posted this recent article from a lawyer's perspective on the U.S. payment system, evolution, and money in the digital age. Now, he also mentions that this was written by the lawyer Jess Chang. Who is Jess Chang? Well, she's part of the board of governors of the Federal Reserve System. and also former counsel for Ripple. So this is directly on the Federal Reserve's website here, Board of Governors of the Federal Reserve System, and it's a lengthy article. I will link it, of course, in the description if you guys are interested in reading it. I just wanted to go down here to the conclusion just to kind of wrap up some of the important points. This note has discussed money, the U.S. payment system, and their legal underpinnings through the lens of network effects and interoperability. She mentions interoperability a lot, actually, in this article, noting both safety and efficiency as core tenets to explain where we sit today and how we came to this point. As this note illustrates, the U.S. payment system is comprised of a growing municipality of users of money and payment arrangements. Diversity and responsible innovation in the payment system traditionally have served customers and businesses' needs well, enabling competition and reflecting market preferences for holding and using different forms of money for different types of transactions. So going into the wide variety of types of fiat currencies, I suppose, traditional fiats, and how that is ever evolving. Of course, we're in a global marketplace, so we are going to see more need for interoperability. Continuing on, though complex, the system is able to function smoothly and safely, largely because of the Federal Reserve's role as a network hub that supports efficient interoperation of a system's component parts, and because of the unique stability of settlement of the Federal Reserve's balance sheet. From a legal perspective, although different legal bases underpin different arrangements, U.S. payments law as a whole, commercial law and regulatory regime and supervisory framework, aims to provide certainty and predictability that $1 has a singular meaning in wherever form it takes. This legal framework has evolved, built on the U.S. payment system's core tenets of efficiency and safety. Today, the U.S. payment system continues to change, particularly among payment services offered by non-bank companies. So that's interesting to note. Private companies, non-bank companies, systems, fintechs perhaps, like Ripple. Risks emerging today include a lack of users' understanding of rights with respect to a new payment arrangement, a lack of clarity about the applicability of regulatory protections, and system inefficiencies that result. Innovation would not serve the U.S. payment system well if it results in new services and products that are poorly understood and poorly constructed, and that do not interoperate well with other forms of money from a legal standpoint. So again, remember, she was on Ripple's legal counsel, so she does certainly understand all of this. The law has a critical part to play in continuing to ensure confidence in money, and that the system's various forms continue to have a singular meaning of $1, in quotes. Interesting to say the least. A lot of interesting information in this article, and so I will link it in the description. But again, another great find by the Wrath of Kahneman. Jess Chang on the Board of Governors at the Federal Reserve and former Ripple counsel, and he just lists also her the PR announcement from 2015 when she was announced formally as part of the Ripple team. So interesting to say the least. Great tweet thread here. Wanted to thank the Wrath of Kahneman yet again for posting that. And money, right? The US dollar in jeopardy. There's a lot going on sociopolitically right now. This is why now more than ever, we do really have to be paying attention to how money is going to evolve. And, if the US dollar, for example, is going to be usurped as the world reserve currency. Again, this paper was just published last month, so a lot has happened since then. BondCrypt XRP has brought this to our attention. China's central bank has currency swap agreements with 41 countries. So put that into perspective for a second. China already has agreements with 41 countries. Several partners like Russia have good reason to increase their utilization of the renminbi to settle payments. They can utilize China's CHIPS system, I believe that's supposed to be CHIPS, or is it CIPS, C-I-P-S, which clears payments in yuan instead of the US dollar. So let's get into this for a second. Since 2014, China has been a forerunner in carrying out tests for centralized digital currencies, as we know. We know they plan to build out cross-border payment systems. We know they are a big trading partner with many different countries worldwide. And as Russia's biggest exporter partner to China, China has good reason to promote a higher degree of international usage of the digital yuan in global trade and finance. At the moment, some of Russia's banks have been severed from the SWIFT messaging system, which is used by financial institutions, as we know. And so the 41 countries, and I'm sure that number is growing, they already have essentially on and off ramps to trade with China through a digital yuan, through the Chinese currency. When the ECNY becomes available for international transactions, it will facilitate efficient cross-border and intercurrency transactions, according to Amnon Samid, CEO of an Israel-based cybersecurity firm. He says the CBDC cross-border payment system is aiming to achieve real-time transactions in multiple jurisdictions and be operational 24/7. As such, it can revolutionize financial markets, reduce dependence on intermediaries, be more efficient, and help create healthy competition. In the future, it may substitute or coexist with the SWIFT system. I have a feeling it is going to substitute the SWIFT system, because think about it, if China's already doing blockchain, DLT, cross-border, they have a system that they're already working on, and they already have relationships with 41 countries, at least as per this article, 41 different countries with regards to trade. Well, what does the West do to protect their economy and the financial infrastructure therein? Well, countries like the United States have to make a decision. The United States, the biggest economy in the world. So what do they have to do? They will likely have to use something comparable to compete. And SWIFT is just not going to cut it. SWIFT has been politicized. It is a tool at this moment in time to impose sanctions on countries like Russia, and this is what we're seeing today. But guys, SWIFT is not going to last, and Ripple has always been clear that they are a competitor to SWIFT and that they are going to take over a large percentage of SWIFT's market share. This from Emily here. If XRP takes over just 1% of SWIFT's market, the price will be around $120 per coin. And we just talk about 1%. This is only a small fragment of the market. Imagine what would happen if XRP took over the entire market. Now, I've done videos in the past. Fun videos, taking total volume of SWIFT and assuming that, all the money was going to run through XRP. The price, what could XRP price really get to? And, whether it's $50 or $150 or $1,000 or $5,000 or $10,000 per coin, those numbers are so exorbitant. At some point, XRP does need to command a high enough price. And I know $50 is very different than $1,000, but it does have to command a high enough price. 74 cents just isn't going to cut it. And so what can we look forward to? Well, I also saw this from Kevin here on Twitter, $1,200 per XRP in 1 to 2 years. This is a Linda P. Jones podcast. I don't know who this smart lady is, but she gets it. XRP community, all about that daily volume of transactions. And that's going to be the real indicator, the volume, the daily volume, and the liquidity. This is why Ripple has come up with the liquidity hub. We need to have the liquidity in order to be able to facilitate these transactions. And so let me play you guys this clip real quick.
The SWIFT system right now in our traditional banking system, just getting 10% of that transferred over to the XRP ledger is arguably going to create a $1,200 valuation for XRP. So today, 1 XRP, 77 cents. In the future, we can make a very good case for just getting 10% of that SWIFT traffic, increasing XRP's value to $1,200 per XRP. That's a 1,558 time increase. And that's not even the maximum price that I can see or argue for XRP. It's only my first target, roughly around $1,000 to $1,200, which I think is very doable within a 1 to 2 year period. So that's why I say, if you're not an accredited investor yet, don't worry.
$1,200 within 1 to 2 years. When we were talking about this in 2018, it seemed like, okay, maybe we could wait that long and maybe that'll come to fruition. Of course, a lot has happened in the world since then. I got to give you guys some context. I got into this space in 2018. We were all thinking, XRP is going to take over the world, the new financial system, the bearable guy riddles, so on and so forth. But we needed a catalyst. And the catalyst was March 2020. The beer flu lockdowns, which essentially decimated all markets. But this was a reset point. A reset point for all markets. Cryptocurrency has rallied since then. Now we're seeing a situation with Russia and Ukraine. So we're almost seeing this leapfrog effect, the decimation of the economy. You tie in the Great Reset with that. And, talking about concepts from a multitude of videos that I've done over the years. So, you put that all together and you think to yourself, this was the time. The Great Reset is happening now, or at least the powers that be are trying to implement it now. And so, talking about a $1,200 XRP in 1 to 2 years, I can see that as a more reasonable reality now, having gone through what we have gone through as the XRP community. And so, in 2018, it was fun to assume what could happen next, but we never really knew. We never really understood what the timeline could be. Since the beer flu, though, I think things are getting clearer and clearer by the day. And now that we have the Russia and Ukraine situation, sanctions, the economy worse than it has ever been, this is looking more and more like a reality every day. Also, let's not forget this. This from XRP or XR Prince 3 on Twitter. SWIFT, are they done? 75% of all global banks are already pulling out of the SWIFT payment system. Listen to this.
This is a really key point because Ripple is really at the cutting edge of this. So you guys should all be really proud to work here. 75% of big global banks, especially US ones, are pulling out of the international correspondent banking system. It's just too onerous. The regulatory requirements are too painful, and people say, well, it's not worth it. Why should I have a correspondent banking pair with Uganda or Ghana or, Chile? Why should I bother? And so new innovations like the Chinese digital yuan, like the big payments platforms in China, could take its place. On the US side, what do we have? I mean, if we had national champions in the US, which we don't, of course, Ripple would be it. We could be on the really positive side of this as we start gaining traction. And I don't have to tell you all because you work here and you help make this happen every single day.
So this is somebody who works at Ripple talking in what looks to be an internal board meeting to Ripple employees, essentially saying 75% of all global banks are already pulling out of the SWIFT system. And what is the new innovation? Where is it going? Well, of course, as we know, Ripple has been partnering with central banks. And so if they are not going to be using the SWIFT system, they of course will be using a DLT technology. And in this case, it sounds as though they will be using RippleNet. Now you ask yourself, who is this? Who is this person? This is former State Department official Anja Manuel. She joined Ripple's board of directors back in 2017. She is a respected foreign policy and regulatory expert with extensive experience in international business, policy, and government. She currently advises U.S. corporations on how to expand into emerging markets, particularly India and China, as co-founder and managing partner of Rice Hadley Gates LLC, along with former U.S. Secretary of State Condoleezza Rice, former National Security Advisor Stephen Hadley, and former Secretary of Defense Robert Gates. In addition, she is a lecturer on U.S. foreign policy in Asia and Stanford University's International Policy Studies program, a position she has held since 2009. And she is on Ripple's board of directors. Stating right here, and this is not brand new, this is from a few months ago, but stating right here essentially that Ripple is the new technology that will be taking over SWIFT. So you consider that, and you consider a price of a $1,200 XRP in 1 to 2 years. Of course, we still don't know if that timeline is realistic. We still don't know how all these socio-political events are going to play out. But the economy is in turmoil, guys, not just the US economy, global economies worldwide. And the whole plan, the whole Great Reset, was to revamp the financial system, tear it down before building it back up. This is why we hold XRP. Well, at least is why I hold XRP. But that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.